Recent inflation data is bad news for investors. Inflation rate will increase 0.4% in September. Hello, welcome back again in another new videos of the Bitcoins. In this video, we are going to be talking about why the recent inflation data is bad news for the crypto investors. And also we will discuss about the why 0.4% inflation rate will increase in the September. So watch the video until the end. Before starting the video, subscribe to the channel's Bitcoin Thinking and turning on the red notifications button so you'll never miss any of our new videos. So back to the main topics, guys. First, check out all tweets that the CNB Squawk Box has been published about that questions.
You know, we're a commodity state. High dollar value affects us. But for the most part, people are pretty optimistic in North Dakota. When you look at what's happening in agriculture with markets, people are making money, and they're making money in the oil patch and probably will make even more money after OPEC cuts production. And so overall, if you look at North Dakota's economy, other than the people who are working for a living who are...
Breaking September retail sales remain unchanged. Rick Santelli breaks down the numbers. People are criticizing Liz Truss and the boy for pursuing both a stimulative policy and an interest rate hike policy. That's what his administration is going, says Sen. Bill Cassidy. The American Rescue Package is a stimulative policy a direct as to the rising interest rates. C earnings are out, beating expectations on both the top and the bottom, Leslie Picker's report. The US government also pays for the things that the inflation make higher cost, says Pace Legal. The fiscal risk is interest rates, whether it's nation defense, the more tax cuts depending on the educations, anything interest payments are going to squeeze all of that out. Happening now. JPM up more than 2% in the pre-market after beats on the earnings. INFY up fractionally after rising revenue guidance. DAL up 2% in pre-market after the common corridor the stocks to outperform. And DAQ shares are falling after BAC downgrade. Frank CNBC explained that. Fees on fixed income are going to be the better than expected given rates, says the Stephens Link. Those stocks are trading that about book value. Expectations are low and I am overweight on the banks. This could have been a bear market rally, but I don't think so, says Scaramucci. We have looked back in 3 to 6 months period of time and say, wow, that was the moment that the people started to realize things are going to get better.
Markets interpretation of where those rates are going. We are, in my opinion, coming to the end of this bear market. So this could have been a bear market rally, but I don't think so. I think this is the start of something new. I think there was full-blown capitulation on the short side yesterday and lots of institutional buying. And so we may look back in a 3 or 6 month period of time and say, whoa, that was the moment where people started to realize that things are going to get better, and they're going to get better quicker than the bears think. And so I think we're on the way to something new. Let's see what happens if I'm right about that. No.
Let's take a look on at the new tweets of Twitter users. September CPI report with against CPI report. Lower YOY percent increase, fuel, oil, gasoline, electricity for at home, now new cars and used cars. High YOY percent increase, gas, utilities, transportations, food away from home, shelters, medical care and apparel. The latest inflation data is more bad news for the investors and especially the crypto investors and especially the Bitcoin investors. The Consumer Price Index CPI is a measure of what consumers are paying for goods and the services, rose 0.4% in September, high 8.2% in the last years. That's the higher than economists were accepting, and while the report shows inflation is slightly last month, it still remains astoundingly high. Core CPI, which excludes food and energy price production, jumped 6.6% from years ago, the biggest 12-month gain in the 40 years. The fact that the inflation is still high is not what the Federal Reserve was hoping for. The central bank has been raising interest rates in the efforts to bring down those high prices and cool the economy. In September, the Fed raised rates by 3/4 of a percent point, and the minutes released on the Wednesday from the meeting indicate that it expects high rates of the stocks around the interest price comes down.
About up 0.4% month over month on a month over month core, ex food and energy. You're talking about CPI up 0.6%. That's 0.2% hotter than expected. We immediately saw a massive shift in the futures markets. The Dow futures now down by 300 points. We'd been up by about 300 points before, maybe up 250. NASDAQ is indicated off by 276, and the S&P down by 58 points. If you've been watching yields, this is a real story, too. The 10-year, I saw push above 4% on this. It's sitting right now at 3.977%. The 2-year, wow. 4.43%. Very significant moves, completely reversing what we'd heard on this expectation, these kind of rumors that are out there that Liz Truss's government might reverse. That calmed down yields earlier across the globe. But this is a whole new thing.
Go buy your
this is an expectation of what's going to be happening with the Fed not able to take the foot off the gas at this point, continuing those rate hikes.
The inflation increased 0.4% in September, more than expected despite the rate hikes. The consumer price index increased 0.4% from the month, more than 0.4% Dow Jones, and estimated according to the Bureau of the Labor Statistics. On a 12-month basis, so-called headline inflation was up 8.2% of its peak around 9% of June, but still hovering near the highest levels in the early 1980s. Including the volatile food and the energy price productions, core CPI was even higher for the month and accelerating 0.6% against the Dow Jones estimated for a 0.4% increase. Core inflation was up 6.6% from years ago, the biggest 12-month again.
Well, the way I read it was the Fed's going to raise rates 75 basis points. There's no question they're going to keep going. You're printing an inflation CPI number of over 8%. What no one knows, though, is how much of this inflation is caused by supply chain issues. Because, I've got a pretty good lens on supply chain issues. I have 54 private companies in our portfolio. It hasn't worked yet. It hasn't worked yet. I'll tell you something very interesting about this cycle. And of course, every recession has a different tone to it. We get tear sheets every Tuesday morning on revenue and free cash flow from most of our companies. So we get a pretty good read on a weekly basis. And so far, and this is kind of interesting, no slowdown yet. No slowdown. And these are consumer goods and services. So we have not seen a slowdown. And the reason we care about this data is we're trying to make a decision on what we're going to do with inventory going into holiday in the U.S. We've got a $110 million decision to make in the next week. Do we build inventory with the assumption that demand remains constant, or do we feel in Q4 that demand will pull back because the Fed's raised rates? And so we've made the decision. We're going to go balls to the wall, build out for Q4. We don't see the recession in the next few months.
On the interview with the YouTube channel's Crypto Banters, Kevin OLeary stated that the Fed is going to raise the 75 basis points, so there is no question to keep going. Your printing and inflation, your consumer price index over 8%. No one knows how much of this inflation is caused by the supply chain issues. Based on I have again pretty good ones on the supply chain issues. I have 54 private company portfolio that the inflation now will get soon. The supply chains I think worked out well. It's dropping prices, but we have not been able to get it worked out. So I think half the inflation, and frankly from my point of view, this is the temporary supply. We have inflation in the first place. We have in the US, we have printed $6.7 trillion in the 30 months. What expect going to happen when you print that the much of the definition of the inflation is too much cash is crashing too few goods. There is too much money, $6.7 trillion in the 30 months of the free money. Let's take a look on President Joe Biden September CPI report. Officially, White House presented the statement of President Joe Biden on the September price index report. President Biden on the Thursday said he saw signs of the progress in the government report that show consumer price rising faster than expected, but acknowledged that his administration had more work to do to combat inflation. In this report, they shows that some progress in the fight against their prices, even as we have more work to do. Inflation over the last 3 months have averaged 2% an annualized rate. That's down from 11% from the prior quarter. The Inflation Reduction Act look in lower healthcare premium for 30 million people, lower senior prescription drug prices, and caps their out-of-the-pocket expenses for prescription drugs at the pharmacy at $2,000 per year. Joe Biden tweeted that about the reports and the inflation data. Today's report underscores why I have made fighting inflation is my top economy priority. My administration will continue to do everything we can do to lower prices for the American people, but Congress must act urgently as well. As the United States inflation remains at the multi-decade high, the Federal Reserve has been aggressive with its interest rate hikes. In fact, rates have been risen more than 2% in the just 6 months. Here is the duration and the severity of each interest rate hike cycle since 1988. The Fed expects to raise its target rate to around 4.4% by the end of the 2022, up from the current range of 3.2%. However, they don't forecast inflation reaching their 2% target until 2025. Kevin OLeary said that in the interview, the cycle of the course, every recession has a different tone to it. We get here, she said, moving on the revenue and we free cash inflation from most of the oil companies. Go to with annuity, go into a hole in the United States. We have got $110 million decisions to make in the next week, and we do feel in the quarter four that demand will pull back because of the Fed's decision. Look at that tweet about the next Fed meeting. I am calling it. We shall get a 50 basis point rate hike at the next FOMC meeting. Bullish. That's it for today. If you haven't already, subscribe to the Bitcoin Thinking channels and turning on the red notifications button. We are uploading all the videos on the cryptocurrencies, especially the Bitcoins, on the daily basis. So see you next time.